All right. Hello, everybody. Welcome to episode, I don't know, of Unbiased America Live. I think it's 6 or 7, but I can't really keep track since our transition from Beer and Bastards. We have a regular panel, well, our irregular panel. We have Grant Phillips back from the Modern Libertarian, who also was on Tom Woods Live, episode 461, which you could find on Unbiased America. We shared it today, my personal page, Will Ricciardella, and Grant's Modern Libertarian, as well as Being Classically Liberal. We have the purveyor of Being Liberal Logic here and Being Classically Liberal, who's back from a long hiatus of, I don't know, you were moving, and then I forgot what, because I really don't care that much. You were doing something else that no one cares about. Also, also we have Matt Palumbo, we're going to do, Matt Palumbo's Financial Corner today, since he's a resident financial expert. He's definitely not an expert on haircuts. He is also the author of In Defense of Classical Liberalism and The Conscience of a Young Conservative, which you can buy on Amazon for, like, how much are they, Maddie?
Like 15 apiece. Well,
okay.
like, congratulations on remembering the names. It only took you, what, like 30 episodes to...
Yeah. It took me, that's just as many to remember the name of Grant's page, too.
Okay.
So, also, our guest... Rick Rule, who's the founder of Sprott Global, the director, president, and CEO. We're probably going to open with a talk of some broad-based investing questions, and then we'll get Maddie in there to ask you questions on finances. And in the meanwhile, we'll interject with some questions so the viewers understand what the heck you guys are talking about. So, Rick, the market. I have a couple just broad questions about the market. Obviously, with the government controlling interest rates, they control somewhat of the allocation of resources. A lot of people are putting their money into the market today because it's really the only place you can get a return. I mean, government bonds are... You could actually give me money, and I can give you more back than a government bond can. And, buying real estate has become somewhat difficult, and there's not a great return on it in most places. I mean, in California, again, they're actually starting to prop up a lot of this. They're doing a lot of the same things that they did prior to the Great Recession. But do you see a bubble in the stock market right now?
Well, that's an interesting question. I need to caveat it by saying that I'm a credit analyst first and foremost, and a natural resources expert. When I look at the balance sheets and the income statements of the largest companies in the United States, the S&P 500, I'm struck by how stout the balance sheets are, and I'm impressed with their profit margins. The things that concern me as a non-specialist are the very tepid top-line growth in those companies. I wonder how long they can continue to expand margins when they don't seem to be able to grow their sales. But I'm not one of those who thinks that the U.S. equities market is immediately in line for a dramatic collapse, in some measure because of the phenomenon that you just described. When I was a young man, if you went into a banking institution and opened a depository relationship, they'd give you a gift like a toaster or something.
Yeah.
But my fear if I go in now is that I'd have to give them a toaster to take my money. So the truth is that the yields on the biggest equities in the United States are attractive relative to some of the competition from deposit products. And I agree with your assertion, by the way, that the interest rates are artificially low. My suspicion is that if the implicit subsidy came out of the market with low interest rates, two bad things would happen. The cost of capital to the big publicly traded companies that are afforded by very cheap debt would go away, at the same time that the capitalized value of their distributions, i.e. their share price, would decline. Mm-hmm. But one more time, I want to caveat it by way of saying that I specialize in natural resources, and I'm really a credit analyst rather than a broad market seer.
Okay. How did you get into natural resources more specifically? I know Maddie has a lot of questions about that, and so do I, insofar as making money. But how did you get into that initially?
One mistake after another, really. I was interested in resources in my teens, paradoxically because I like to be outdoors. Now I'm characterized as the great despoiler by other people who like to spend time outdoors. I emigrated to Vancouver, Canada in, I believe it was 1970. In response to the fact that it was a very pretty place, but also in response to the fact that a young American in those days was going to have to travel. And I thought about my options: Vancouver, Saigon, Vancouver, Saigon. And Vancouver seemed more appealing to me. And being in Vancouver, of course, this was and is a great center of natural resource activities: the fisheries, the forestry, and of course the epicenter of global exploration. So one thing led to another, really, and I chose to focus, to my very good fortune, ultimately, on natural resources.
Okay, that's interesting. So how did you, just one more question, how did you start Sprott Global and become so successful? I mean, and where did you do that more from the States or more so from Vancouver?
No, certainly from the U.S. I had a long career working for other people before I began in 1990 working for myself. And really, I didn't set out to become an entrepreneur or anything like that. What I learned is that it isn't all kindness and love in the financial services business. Now, I actually founded my own firm in 1990 to protect my clients from the depredation of other larger firms. It ended up the greed and larceny inherent in the industry was good for both me and my clients, because going out on my own turned out to be a superb move. When in 2010, running my own firm began to consume so much time that I was less able to look after my customers' money, I sold my business to Sprott, but I sold it for stock, not for cash. So I'm now, I think, the fourth largest client and the second largest shareholder of Sprott.
Wow. Okay. Very cool. Now, relating, you're in Vancouver, you're in Canada, and you're in Carlsbad in the States. What has a more propitious climate for investing, insofar as it relates to regulations and taxes?
Oh, I think the U.S. is the most competitive society in the world. We win everything, including the race to the bottom.
That goes without question. Oh, okay, I'm sorry. Go ahead.
Well, the most pernicious, the oddest regulations are certainly in the United States. As an example, we have 50 state satrapies to regulate us in the securities business, and then we have the grand champion, the SEC. In addition to that, we're regulated ourselves through FINRA, where a bunch of industry-appointed hacks each try and outdo each other in their slavishness to the stupidity involved in federal regulation. It's truly an odd circumstance. I could make you laugh or cry, I think, for the balance of the program. Certainly make you return to your original program, the Beer and Bastards.
Yeah.
If I entertain you with the SEC. By the way, our mutual friend, Doug Casey, described the SEC as an acronym for the Swindlers Encouragement Committee, and we could talk about the perniciousness of the SEC and the way in which they act exactly contrary to their mandate of consumer protection at some point in time in this interview, if you so wished.
Absolutely. Now, let me ask a direct question about the SEC. And, I mean, you mentioned some of my, you briefly went over some of the questions I have in a second about a lot of these things being superfluous at the state level. Certainly at the federal level. I think under SEC you have PCOB 2, which does auditing, which is another, I can't remember their name, obviously PCOB is an acronym. But do you think the SEC really operates like a Politburo? I mean, where are they getting, they're just really coming up with regulations, it seems, at a thin air. And is it to protect some people at the expense of others, like a rent-seeking organization? Basically what a Politburo is.
Well, I would suggest that they're not as efficient as a proper Politburo because they still exist under the guise of a democracy. And I suggest that that there are many competing interests which get served by the SEC. Certainly your direction is accurate, but I think that you would expect more efficiency from them if they were a proper Politburo.
Right now here.
Go ahead.
I think Will froze.
Yeah, somebody. He didn't like.
Oh well. I guess I'll take over.
Yep.
All right. So I guess I have kind of like three categories of questions to ask, and I'll get Mike and Grant in, I guess, in between them. But they're going to be, I guess, commodities in general, the recent decline in gold and silver prices, and then we'll talk about oil last. So, I guess generally, like, what is the appropriate allocation, in your opinion, for commodities in a person's portfolio? Because, in my opinion, it's the traditional, start out with all stocks because you can afford to take on that risk. Then later in life, convert more into bonds. And it seems like, to me, commodities mainly sustain value. They're not generating dividends or income or cash flow, I should say. So it seems like it would be more suited for like an older person's portfolio, in my opinion. What do you think the proper allocation is, and what are the pros and cons of commodities as opposed to equity or debt?
Well, this would be a good conversation. I disagree with almost everything you said. In the first instance, I think that gold has a place in everybody's portfolio, but in particular, but no, I'll leave it. It has a place in everybody's portfolio. I don't think that the rational investor buys gold because he hopes for an increase in the gold price. I think the rational investor buys precious metals as insurance. So start there, and I think insurance is appropriate to all classes of investors. But rather, I think the most important thing for everybody to know about natural resources investment is that their proportion of your portfolio varies because the industries are so cyclical. There are points in time when resources are in favor, points in time where the resource narrative has been proven by recent experience, when rational investors will decrease rapidly the amount of natural resources they have in their portfolio. The truth is that these industries are both cyclical, and capital intensive, which means that to be a natural resource investor, you must be a contrarian, or believe me, you will be a victim.
Right.
When natural resources are very unpopular. They have all kinds of wonderful investment attributes, sadly most of which are not easy to see at the time. When the natural resource narrative has proven itself, when we've had 4 or 5 good years of commodities prices, the sector becomes so profitable and so popular that it becomes a death trap. And at that point in time when the narrative is popular, you have to run for your life. So it's an odd investing sector. You have to counteract your heart at the bottom, and you have to sort of negate your greed at the top. So I think the proportion in one's portfolio probably varies from a low of 5 to a high of 25 in inverse proportion to how attracted you are to the sector emotionally.
So I should clarify, when you're talking about natural resource investment, you're talking about countries that are in that industry. So, for example, like, instead of investing in oil directly, maybe invest in Chevron. So, like, with gold, do you mean invest in like a company that mines gold as opposed to gold itself, or?
Well, I would suggest both. I suggest in most portfolios that you should hold physical precious metals or certificated physical precious metals in addition to owning the gold and silver shares.
Okay, I see.
So what percentage of one's portfolio should be in precious metals? Would you say?
5 to 25.
Oh, 5 to okay.
Yeah.
Between 5 and 25 for the whole complex. For the whole natural resources and precious metals complex.
Go ahead, Matt.
And I guess in my opinion, one of the benefits of owning a commodity is there's really not any risk of it going to zero, because if the price of oil is never going to zero, the price of gold is never going to go to zero. So like, what is it a long run strategy for you investing in those commodities, or is it? I'm trying to think of a way to phrase this.
Well, certainly you need a 3 to 5 year time frame.
Okay.
In commodities investments for 2 reasons. They're extraordinarily cyclical. And if you bought today thinking that today was the bottom of the cycle, it would be easy to be wrong for a year and a half. In the upcycle, you are going to enjoy very, very, very happy times for the 4 to 5 year time frame. So one needs to be involved for the longer time frame. The second thing, of course, is that in natural resource equities, you don't buy the equity necessarily just because you think the commodity is going to increase. You want alpha over the commodity itself, and the alpha is generated by some events that is unique to the company. And given that these businesses are very capital intensive and time consuming, the event that causes you to invest in a company, the change, the answer to the unanswered question could take 2 or 3 or 4 years to come in to come into the market. So it's important that when you are investing in commodities or commodities equities, that you have a longer-term time frame. By the way, I think if you talked to specialists in most other sectors with regards to equities, you would find that the experts have a much longer time frame
than
the traders and the pundits. And I think that the suggestions that I've made would hold true of most other sectors.
Yeah, I mean, the thing with, like, the pundits say on TV is, by the time the news is reported, it's already too late to invest in it, because everyone knows. So I really don't think you can go off what the pundits are saying.
I think that's accurate. The other day, I found myself on CNBC on a segment called Fast Money.
Oh, yeah, I've seen it.
I quipped that I had been miscast, that they should have put me on Slow Money.
Yeah.
But it seems that Slow Money doesn't sell mutual funds or the other products which they're selling on CNBC.
Yeah, like I guess my philosophy is, like, I'm like just a basic index fund kind of guy. So, like, I'm a get rich in 45 years kind of guy, but I don't think that will sell myself to, or I don't think that's going to get too many views. So, but I guess to transition more into gold in particular, which I know you know a lot about, prices have been coming down a lot recently, and I don't know, I know some of the causes are, the dollar is getting stronger, so obviously that'll put pressure on gold. There's fear of interest rates rising, and China is a very large consumer of gold products, so obviously their equity bubble exploding is not doing much for them. But do you think investors are fleeing it, or do you think it's, I guess, going to be undervalued relatively soon? For instance, I looked at some of the ETFs that Sprott has tracking gold and silver, and they started trading at a discount recently, showing that people just seem to be fleeing them, maybe without much thought. Do you think there'll be a rebound? And I'm guessing, what's your time frame on that, if you have one?
I'm not certain that there will be a short-term rebound. I'm not saying that there won't, because gold can always surprise us.
Right.
But I believe that gold these days, and probably for the last decade, has traded mostly inverse to the U.S. dollar.
Right.
It's worth noting that if you hold gold in most currencies other than the U.S. dollar, the last 14 months have been pleasant for you. My own belief is that gold trades inverse really to the world's preeminent savings instrument, which is the U.S. 10-year Treasury. I would argue that the strength of the U.S. dollar and the strength of the U.S. 10-year Treasury, that is the hegemony of American bonds, really are due more to the weakness of competing alternatives than they are to the underlying strength in the U.S. dollar. But that argument doesn't matter too much.
All right, that's interesting.
When the dollar is strong, that gold is weak. And when the dollar rolls over or weakens, that gold gets very strong. We could have a discussion about the relative merits of the U.S. 10-year Treasury relative to gold, but it would play to a very small audience until such point in time as the thesis proved itself.
Yeah, so I remember listening. Sorry, Will. I remember actually listening to an interview with you recently. We were talking about the 10-year Treasury's return relative to inflation, and you were saying, if you invest $100 grand in a 10-year Treasury, I'll get back $100 grand in 10 years. So, what's the point in making the investment if I have $100 grand now? So there really is no point in government securities at this point. But I guess I'll go over to Will really quick before we want to do the next segment.
Oh, no, I just wanted to interject and say, so now is the time to buy gold, in other words.
Well, I would agree with that if you don't agree with the thesis that the U.S. dollar and the U.S. 10-year Treasury deserve their hegemony on a global basis. Mm-hmm. I had occasion a couple years ago to talk to a gentleman that helped run a very, very large pool of sovereign money in Asia. And I don't want to identify this gentleman specifically, but I was talking to him about the value proposition afforded by the U.S. 10-year Treasury and asking why they had so many hundreds of billions of dollars invested in 10-year Treasuries. And I described them, in fact, as, in effect, a lie, a Ponzi scheme. And the gentleman looked at me and smiled and said, "Ah, yes, Mr. Rule, but a transparent and liquid lie, unlike so many of the other lies we've been told."
Let me get to Matt. I know you have more questions. Let me get to Mike and Grant. Grant, do you have any questions about what
Yes, I do have some questions, actually.
Go ahead.
So I've been reading this excellent book about Dodd-Frank. In my opinion, Dodd-Frank, it appears to me, was a law that was written in haste as a knee-jerk reaction that essentially just gave power to all these, like we've been saying, all these Politburos, and with almost no oversight. The Fed has a lot of new powers, the Treasury has a lot of new powers, SEC creates all these new protection bureau stuff, right? But it doesn't seem like it's a very stable law. It seems like it's a concentration of power. It seems to me like it guarantees a lot of financial risk, which obviously increases the risk levels to abnormal than it would be in a free market. So my question to you is, do you see that happening on a daily basis in equity markets? Like, do you see firms going out and saying, okay, well, we can take this one extra risk because it's guaranteed either explicitly or implicitly by the federal government?
Yeah, I think you've actually understated the perniciousness of these laws. You know, I'm the oldest guy on this call by a country mile, but there was this whole raft of legislation which was introduced in the wake of the Enron incident. And make no mistake, Enron was a regulatory failure, not a market failure. So there were a couple outcomes from that. In the first instance, the SEC convinced Congress to raise their budget as a consequence of this failure. An interesting choice. The second thing is that as a consequence of the legislation that came in post-Enron, you'll recall that the Enron incident cost American investors about $100 billion. The cost to American shareholders of complying with the regulations that came into force post-Enron is about $80 billion a year. So what we've managed to do is institutionalize on an annual basis 80% of the loss that the law was designed to prevent. In other words, we've caused an ongoing drag in the economy that's 80% on an annual basis of the one-time event that caused this law to be enacted. But the most pernicious part of this is that it causes individual investors to believe that they're being protected. You know, one of the important things about being the oldest guy on this call is that I had a lot of experience before Enron. And believe it or not, fraud was already illegal. They had laws on the books against fraud long before the Enron debacle. There was a failure to enforce, and there was a failure on the part of investors to understand that if they couldn't understand something, they didn't know enough about it to invest. I was extraordinarily lucky because I really wanted to invest in Enron. But the more time I spent looking at their income statement and the more time I spent looking at their balance sheets, and by the way, those are avocations of mine. I actually enjoy that idiocy. The more time I spent involving myself in the financial statements of Enron, the more I became convinced that I didn't know enough about it to invest. It isn't that I saw fraud, it's that I didn't understand the numbers that I was looking at. And the point of this whole idiocy with regards to the pretense of consumer protection is that most consumers actually believe that they're being protected by the same people who missed Enron. You know, another interesting thing, you mentioned audits earlier in this discussion, and the SEC and FINRA both audit practitioners in the financial services business. And the nature of the audit really is that they come into a firm like mine and they pull a bunch of trade tickets. And then they see that the trade tickets are represented on the general ledger, and they check the check register to see that every trade had money in or money out in accordance with the trade. Then they call the counterparties on the trade and they call the counterparties on the checks to make sure that the blotter isn't a fabrication. Now, the thing that makes this whole procedure interesting is that, according to my understanding from the courts, Bernie Madoff, who made off with $18 billion, didn't make a trade in those accounts. So what I'm curious is, during those audits, how could you pull non-existent trade tickets? How could you audit and verify non-existent money coming in and money going out? these two incidents, I think, Enron and Madoff, point to the level of protection offered up by the SEC at the cost of billions of dollars of direct cost and billions more in indirect costs that come about as a consequence of the fact that investors believe they're protected when their only protection, in truth, is themselves.
I think it's worth noting, too, that there were other investors who accused Madoff's, program, whatever you call it, of being a Ponzi scheme long before, or even years before he was investigated. So it certainly is a regulatory failure more than a market failure.
All right, I have one more question for you. I have been doing a little bit of research on quantitative easing and some of the Fed monetary policies of recent, and you were saying earlier about how you think that interest rates are artificially low. I agree with you. I think they've been low for a very long time, artificially low. And then I look at a booming industry like shale and fracking, and it's very capital intensive. I have a good idea of what goes into building this kind of industrial equipment and setting it up and really getting the operation just generating cash flow to just get started. It takes a lot of money. And it seems to me that the easy money made available by the Fed and the low interest rates is propping this industry up on just easy debt. And eventually the fat is going to be shed, and you're going to have all these fracking companies that just completely collapse because they can't sustain the debt. They can't generate the income to make good on their payments. Do you see that happening maybe just in this industry or another industry or the whole economy where basically zero interest rates have propped up capital-intense businesses and it's kind of a bubble waiting to burst?
I agree with almost all of your thesis. I think the most efficient people in the fracking industry are probably also the people who employed capital the most efficiently. So the best 10 or 20% of the companies involved in fracking will do just fine. They're going to have a character-building experience for the next 3 years, carrying a $90 pro forma into a $50 world. But the truth is the whole range of capital-intensive businesses have been subsidized twice by low interest rates. In the first instance, because of the low cost of debt capital, and in the second instance, because of money chased into equities that otherwise would have gone into debt or deposit instruments. So their cost of capital in equity markets has been cheaper. Their cost of capital in debt markets has been cheaper. And to the extent that we ever get a market interest rate again, it's going to be very hard on capital-intensive businesses. By the way, I should point out to you at the beginning of your discussion that you talked about something called quantitative easing. My friend Doug Casey has taught me to be very precise with my terms. And when I discuss quantitative easing, I prefer the term counterfeiting, which I think more adequately describes the process.
A good question. That's a good question, Grant. And yeah, quantitative easing, essentially government propping up asset prices artificially. I don't know. Yeah, exactly. The money comes out of thin air, essentially. Mike, do you have any questions for Rick? Can you hear me? Oh, he shrugged me off.
Sorry, I had to unmute my mic. It wasn't working for a second. Well, Grant kind of stole one of my questions. I was going to ask about that. But one thing I wanted to clarify, because I think maybe some people watching might have got a little confused, because I did for a second. Matt's first question to you, he said that a lot of people invest in the market because they can't. They don't think they're going to get gains in maybe precious metals, and then precious metals become more of maybe a safe haven to keep your money safe. You started out by saying that you disagree with them, and then you said that you think that people should have precious metals in their portfolio as a insurance policy. So to me, that kind of meant that you actually agreed with what he originally said. Maybe you could clarify on that. Do you think that they can get gains in precious metals? Is that an area where you can get gains, or is that just an insurance policy?
I prefer to think of precious metals mostly as an insurance policy, particularly gold. I own platinum and palladium in my own portfolio because I think that there are supply-demand fundamentals in platinum and palladium, and there is utility to modern society that will allow me to enjoy investment or speculative gains in platinum and palladium in particular. But I own gold for old-fashioned reasons. I own gold because it's a store of wealth that's simultaneously a medium of exchange. You know, J.P. Morgan is alleged to have said that gold is money and everything else is credit. And I own gold for precisely that reason. If I might illustrate for a second, when I was a young man, I frequently stayed at a place called Motel 6. And I stayed there because a room there was $6. When I drive past the Motel 6 in Carlsbad now, it normally says Motel 6, $69.95. Now, there's only two explanations for this. The utility of a room at Motel 6 may have increased 11-fold, which is difficult for me to believe because the rooms are still the same size and I suspect the sheets are still the same. The other possibility is that the denominator, the US dollar, with regards to purchasing a room at Motel 6, is down by 94% in real terms over 30 years. And I suspect it's more likely the latter than the former. Now, what's interesting in the context of gold is that when I stayed at Motel 6 for $6, an ounce of gold would buy me 5 or 6 nights there in Motel 6. Now when I stay in Motel 6, an ounce of gold will buy me 15 or 16 nights there. And that's precisely why I own gold in my portfolio. When people talk to me about the fact that the gold price is down, I have clients who laugh and say that they bought gold at 300. So they need to decide, are they up 700 or are they down 600? You measure your response in gold over time.
Okay, that clarifies what I was asking. Thank you.
Pleasure, thank you.
All right, Maddie, go ahead.
Right, so speaking of gold as an inflation hedge, I think we all agree, there's that value as insurance. Jeremy Siegel makes the argument that stocks also have the same inflation hedge, but over a longer period of time than gold. So basically his arguments, obviously we know stocks are a claim on assets, so if inflation's 3% and the value of the assets that the company owns will then go up 3%, and therefore the value of your stock should, in theory, go up 3%. It might not happen in the short run because inflation might distort the economy, but over longer periods of time, stocks should have some sort of inflation premium built in. So would you think, or I'm assuming you would disagree with the statement that gold is a better short-run inflation hedge than stocks, but stocks are a better long-run. What's your take on that argument?
I take exception to many things that Mr. Siegel says, but I actually agree with that one. I just think you need to have a much longer time frame.
Right. Okay.
Gotcha. I also don't think that gold and stocks are mutually exclusive in a portfolio.
Yeah.
I came into the financial services business, if my memory serves me correctly, in 1975 or 1976, and people who came in alongside me, young stockbrokers, if you will, experienced a equities bear market that really began in 1969 and ended in 1982.
Right.
And it's useful to understand that when people talk about the long term in equities, they're talking about the truly long term, 20 or 25 years. And the truth is that having a bit of diversity in your portfolio, by the way, including cash, even given the depreciation of purchasing power, having a bit of diversity in your portfolio gives you at once the tools and the courage to withstand the vagaries in the market.
Mm-hmm. And I'm kind of tying back to something you said earlier. You're talking about how gold has actually risen in other currencies. I guess to give you the opportunity to pitch your firm a bit, do you have any ETFs that track gold in other currencies, or is that an idea I can sell to you?
Sprott has not done that. Dennis Gartman has done a very good job of introducing products to the market that cover that angle. Unfortunately, Mr. Gartman isn't a very good marketer, and so the ETFs which he has sponsored in the market have been noticeable for their failure to attract attention, perhaps because they had gold as part of the title. The Sprott organization is looking carefully at issuing ETFs that are denominated in currencies other than the dollar, largely for the institutional investment community, and it's something that we might do.
Maddie, do you have any follow-ups?
Not to anything relating gold.
I have a question.
Okay,
yeah,
go ahead, Grant.
Yeah, so we've been talking a lot about gold now, and it's my understanding that you're fairly libertarian. Would you call yourself libertarian?
Yes, I mean, I'm with the caveat I'm not always sure what that means, but yes.
Okay, yeah. Okay, so my question to you is, do you agree with a gold standard? Would you support a gold standard in the United States today? Why or why not? And if not, what would be your alternative?
Well, from a sort of a minarchist point of view or a libertarian point of view, a gold standard would be a good thing. From a theoretical point of view, if all the government people just went away, I guess whatever sort of standard that people wanted would superimpose itself. The idea that you're going to have a fiat currency and that the fiat currency should aid the people seems to me to argue for a gold standard. It seems to me that if you untether the medium of exchange from the ability of the elected elites to manipulate the medium of exchange, that would seem to be in the interest of people who employed the medium of exchange. So in that sense, I would argue for a gold standard. I will tell you that I think that you and I, in this context, are having a discussion that's an academic discussion, because it doesn't seem likely to me that the people who benefit from manipulating the exchange, the people who subject their families to all the idiocy that comes from running for office or serving in office, would do so for any particular altruistic purpose. It seems to me that they're eager to aggregate power, and the idea that they would devolve some of that power back to you and I seems highly unlikely. But yes, a gold standard in a minarchist or libertarian rather than anarcho-capitalist society would be a good first step.
So you sound like you have kind of a Milt Friedman view where, you know, you don't like the monetary institution, but at the same time you realize that a gold standard isn't really probably ever going to happen. So if we're going to have a Fed, let's at least make it work right. Would that be a correct interpretation of that?
Well, I don't think the Fed is ever going to work right in the absence of a gold standard. I don't think it's set up to work right. I just don't.
Well, okay, so Hayek talks a lot about competing currencies and having not just a central bank but also private issuers of currency. Is that an idea that, I mean, obviously in a minarchist society, if whatever you find of value to exchange.
I think that's a spectacular idea. You know, I'm an old fat rich guy. I'm a consumer of currencies. And
can we get some rule dollars?
Yeah, hell yes. I mean, in that case, I'd like to be a producer. But to the extent that I'm a consumer, you know, if I was a consumer of tennis shoes, I would want there to be 50 tennis shoe manufacturers. And to the extent that I'm a consumer of currencies, I like the idea of gold and dollars and rubles and bitcoins. Bitgold, you know, if there's 50 mediums of exchange competing for my love and affection, I'm certainly better served than being a slave to the Fed.
I mean, just to paraphrase what you said earlier to Grant's first question was essentially that I favor a gold standard if it reduces or eliminates entirely government control over currency, and you would favor fiat currency if the government was out of it entirely, or just perhaps maintained a stable currency without the existence of a Fed manipulating interest rates, thereby manipulating resources.
Yeah, I mean, I'd be fine if the dollar wasn't the proscribed medium of exchange.
Right.
You know, I wouldn't hold any of them. It would amuse me to have them as a marker.
Okay, yeah, I definitely think competing currencies is the way to go. There is, like, you know, what Hayek was talking about, Friedman's objection to the competing currencies at the time, which we talked about with Steve Horowitz a little bit, was network effects and transaction costs due to network effects. But I think now with like Bitcoin and these digital currencies, you would have less of a problem with network effects, that people could more readily accept currencies via these virtual wallets and everything that they have for Bitcoin. I don't think Bitcoin is necessarily, I think it's a great idea. I don't think it's anything that I would ever really buy to trade in, but I think it's the beginning of something really great. What do you feel about Bitcoin, Rick?
I'm intrigued with Bitcoin, and I'm intrigued with Bitgold, frankly. I like the whole idea of the cryptocurrencies and competing currencies. One of the hallmarks of competing currencies will, of course, be that some fail. That's the nature of markets, and it's the nature of competition. I, of course, have my favorites, and you know, to the extent which the euro and the yen and the dollar failed, I would feel that my own interests had been served. But there's no guarantee that that would happen, of course.
Right.
But the whole concept of competition is that the currencies that had the high transaction costs or that had low utility in some way, shape, or form would be replaced by better forms of money, and I think that would be wonderful. Again, I'm a consumer of currencies.
And that's that's essentially what Hayek was saying, is that we've had law that's really been promulgated over centuries of learning, and it's evolved, and language. I mean, no central authority has come up with language. We all speak the same language here, and then money kind of stopped at the time where the evolution of money kind of stopped at the time where government took over money, and these competing currencies, like you said, some may not make it, some will do really great, but in that sense, money will evolve, as it has before, prior to obviously government taking over money. And to the discussion you had earlier, Grant, which Rick mentioned as an academic discussion, was that even with gold standards at the government level, which is a problem with gold standards, is that it never existed ever without fiduciary money, alongside fiduciary money that the government can manipulate and inflate just the same manner as they can do now with fiat currency. So I
believe it was the Roman government, when they had silver coins or whatever the material was, they used to chip pieces off of it and melt on like a fake cover up for it, and
that's right.
That's inflation, right?
And they would devalue the currency. Then people, and then you have it's Gresham's law. The bad money chases out the good. So then you have people, they don't really want to use the currency after a while anymore. Also, I mean, that's interesting. That's why our quarters have those ridged edges, so you can't knock off the little pieces. The American quarters, I don't even know what they use in Canada anymore. What are they using up there? Are you guys trading in tobacco leaves still?
They have dollars there too, Will.
Beaver pelts on a good day.
Well, can I interject with a question
Yes,
here?
go ahead, Mike.
We're talking about competing currency, and one issue that's always been interesting to me because I lived in Europe for so long was the euro. And I kind of want to get your take on what's happening in Greece and with the euro. You have a situation in Europe where it's kind of one economy right now, and the eurozone's all tied together. And do you think they would benefit from disbanding the ECB and having competing currencies again?
Yes, I do. Europe is a really interesting topic on a whole bunch of levels.
Definitely.
Again, quoting Doug Casey, he described the dollar as an I owe you nothing, and he described the euro as a who owes you nothing, which I think is a wonderful way to discriminate between the two currencies. With regards to Greece, I hate to say, because I know a lot of people are suffering, that it's kind of a non-event. The European banks had 3.5 years to shift the liabilities from their balance sheet to the balance sheet of the German taxpayers. There was a wonderful fascist response, and we privatized the reward and socialized the risk in very neat fashion. So the impact of whatever happens in Greece on the balance sheets of the Eurozone banks, the private banks, is non-existent. It's been taken on by the Northern European taxpayers. And the impact really of a Greek economic collapse in the Eurozone is pretty de minimis. If that economy collapsed by 30%, representing 3.5% of European GDP, if you didn't happen to be Greek, well, kind of, who cares? I know it sounds very callous, but the idea that we're going to have worldwide economic dislocation as a consequence of a dislocation of Greek pensioners isn't something that I think is a particularly nasty topic. The broader sense that you can have a currency union without having a fiscal union makes me wonder how you can have 3 competing satrapies, 13 competing governments, where the job of each is to steal from the other. To me, it's a very interesting piece of theater to watch. It's really democracy writ large.
I think you hit the nail on the head, and I think what you were saying about Greece not being a big deal is actually absolutely correct. Because if we let the scare tactics get to us and we want to bail out Greece here, what will cause a crash in Europe is you have Italy, you have France, Spain, And if Greece gets a deal, then you're going to have larger economies that are going to want a deal, and that could cause a cascading effect. Letting Greece fail doesn't really have a great impact on Western economies, but giving them a deal and then trying to give the same deal to everybody else, and even Belgium and some of these other countries, that's where you could hit a major problem.
You know, I'm no economist, but the idea that what you do when you're deeply in debt is to get yourself deeper in debt it's just something I don't understand. The idea that 4 years ago, when the Greek debts at 125% of GDP were unserviceable, that we somehow made them more serviceable by taking them to 175% of GDP, represents an understanding of mathematics and economics which are totally lost on me. I just don't understand how getting deeper in debt gets you out of debt. I was taught a poem, I guess it's a poem, a ditty, when I was a young man that I sort of thought, you know, Congress and the European Parliament ought to hear. It goes like this: when your outgo exceeds your income, your upkeep becomes your downfall. And the whole circumstance where a society is encouraged to live beyond its means, in other words, forward shift consumption, as a way to get themselves out of debt, just makes zero sense to me. Whether you call it Greece, General Motors, Chicago, California, this whole circumstance that we're being taught that we can sort of spend our way out of debt. Again, I'm not an economist. I'm a credit analyst. And maybe as a credit analyst, I have this sort of woeful sense that I ought to be paid back. But it seems like a very strange way to conduct one's life.
Well, I definitely agree with you on that. Definitely agree with you.
Just to touch on the topic of Greek debt, I actually was sitting in a doctor's office recently reading Time, and one of the writers tried to downplay Greece's debt situation by saying, like, hey, look at Japan, you know, their debt as a percentage of GDP is 200% of GDP, and they're doing fine. Nowhere did the author mention that something like half of Japan's budget is going towards interest payments on their debt.
And the Japanese came into this situation having some savings.
Right.
Now, there is a pernicious aspect to this, and you hear our own president say, the debt matters less because we owe it to ourselves. Mm-hmm. Well, not really. The spenders owe it to the savers.
Yeah, exactly.
In other words, those bastards owe it to me. Not me, really, because I wouldn't buy U.S. debt. But the truth that it's okay because we owe it to ourselves presupposes a pretty ugly transfer in society, which I guess is taking place anyway, from savers to spenders.
Yeah, and by that logic, I mean, like, if I take out a mortgage, technically I owe the money to myself because I'm getting equity, but it doesn't necessarily mean anyone should take out a mortgage by that logic. I mean,
yeah, one shouldn't ignore the transfer of benefit.
Yeah, exactly.
Well, I mean, also, when he says that we owe it to ourselves, he's not saying it comes at the cost of future generations that we're essentially bankrupting. I mean, you know, I think every dollar we spent, I think only 60 cents comes at our expense, and the other 40 cents comes at the expense of future generations. We have an $18 trillion debt. Go ahead, Rick. I know you want to say something.
Well, as the oldest guy on this call, of course, I benefit from that.
Exactly.
I'm delighted to the extent that you guys are subsidizing me.
Right. I mean, this is what I don't understand about young people, is that the generation that came before, and certainly Obama's generation and older, are destroying young people. Yet young people seem to turn out in droves for these leftists that take out money. Not moreover, the Social Security thing, that whole Ponzi scheme where, we on this panel are subsidizing the wealthiest class in the United States through
We're
Social
subsidizing
Security.
roll over here.
Right. Essentially, my money goes into some general fund and gets sent out as an IOU to somebody who's older, far more successful, and far more wealthy than I am. It's mind-boggling. And then the debt, and they're crushing my kids even. I mean, what do we? It's shocking to me that young people, and they took the takeover. The healthcare industry is not going to help anybody. Certainly not young people. So I mean, again, we're subsidizing sicker, older people. So I don't know. I mean, you know, the political landscape, I don't understand where young people are coming from. But I wanted to ask you some political questions, because I know I asked you some political questions at Freedom Fest, and I kind of got a little bit of an anarchist mindset from you at the time. Do you think, like, as on the 2016 field now, if you had to pick one, let's say two people that have a chance at least changing something or moving more towards free market capitalism and a more constitutional order, giving power back to the states and the people? Who would you say it would be?
None of the above.
None.
None.
I mean, who, at least in their rhetoric? I mean, look, I know a president can't do much, but they could do a lot. But you
I think the president could do an awful lot. I don't think that anybody that is of the mindset to do that would run for president.
Okay.
You know, there's that wonderful old gag about elections being advanced auctions of stolen property. And I would suggest that the political class in this country, be it Democrat or Republican, probably also Libertarian, you know, the idea that people like us who don't believe in politics have our own party is consistently of amusement to me. So no, the last time I voted for a president, I voted for Harry Brown. And I did it in the sure and certain knowledge that he could never win. He was a good friend of mine, and I wouldn't have wanted him to have a job that would wreck his life and cause him to act in ways that were antithetical to everything he stood for. I looked at myself as sort of a young vandal rather than a thief. I didn't feel in the voting booth like I was seeking to impose my will on others. I did it because it amused me to vote for Harry. And I don't see anybody in the current makeup that could A, solve the problem, or B, amuse me.
Right. So you're not even you're going to abstain from voting. You're going to abstain from voting entirely.
No, I'm going to go and I'm going to vote absentee, thank God, and I'll vote against every ballot measure that increases regulation or that involves spending, even when the spending benefits me. I will go and participate in that regard. I won't vote yes to anything, I'm afraid. I'll vote no to everything that I have the ability to understand, and I'll abstain on everything else.
You
Okay.
asked Rick his choice of presidential candidates. Is suicide an option?
Well,
No, all right. I don't have a pick.
I like Rick too much for him to pick that. I'm sure, and he'd consider that option. It seems.
I've already been, so.
Or Cuba sounds like a good one to me.
I thought about running myself, but if I was elected, I'd have to demand an immediate recount, and that seemed.
So we have a couple of segments. I didn't get to talk to you before. Oh, I didn't get to talk to you much before the show. We have we debunk a meme that's been going around online. That the viewers on Unbiased America pick, and it's one, and I'll let Maddie handle this one to start. It's and I'll let Rick address it too. It's cost to the average taxpayer, and it has food stamps and oil subsidies. On one side it says food stamps are $36. On the other side, oil subsidies are $5,737. So it says at the bottom, imagine if we spent as much money protecting life as we do destroying it, because apparently food stamps protect life, perhaps maybe as well as Planned Parenthood does. And the oil subsidy, Matt, can you tell us how the average person does not spend nearly $6,000 on oil subsidies?
Yeah, I have an article out debunking a variant of that meme, and I don't have it up in front of me, but I believe the math, it came out to, like, if that were true, it would mean that something like 50+% of the federal budget is spent on oil subsidies. So obviously that's not true.
So it's a flat-out lie.
By a long shot, yeah. But, I mean, we shouldn't pretend that corporate subsidies aren't a problem.
Huge problem.
Yeah, the estimate I've seen from Cato is that it's about 80 to 100 billion a year. There's about 150 million taxpayers, so if you divide the 100 billion divided by the 150 million, I can't do math, but it's a lot less than 5,000.
Right.
Right.
Okay. Yeah. No doubt about it. Rick, do you have anything to add to that one?
Well, being a 3-decade-long beneficiary of subsidies to the oil industry, I think they're less egregious than food stamps, which I don't receive.
Yeah. I agree.
I think that the tax treatment of the oil industry is testimony to the fact that oil-producing states have done a very good job of sending the same senators back time and time and time again and gaining seniority. And if we go back to the earlier statement about elections being advanced auctions of stolen property, the oil industry has very often been high bid. It's not particularly popular. And to the extent that an industry that's that unpopular has managed to steal that much money, it says something about the intelligence of the people that are running those companies. They're good thieves indeed.
I would agree. Grant, do you have anything to say to this meme? I mean, do you think that's true? 6,000 in oil, and let's say perhaps we did spend 6,000 each taxpayer on food stamps. Do you think that would benefit anybody?
Well, government programs that are meant to end poverty have no incentive to actually end poverty. And the problem with that is because that assumes that a government bureaucracy actually wants to spend less. Because if you were truly fighting poverty in the sense of a government program, theoretically you'd spend less money. I think it was Unbiased America that made this post. It was like we spend like $80,000 per person in poverty, yet there's still 4 million, all these millions of people.
So
in poverty.
what you're saying is that government bureaus actually don't want to do the job because bureaucratic inertia. They don't want to basically lose their jobs.
They want to keep people in poverty so then they can blame other people for them being in poverty, so then they can say vote for me.
Right. So Rick alluded to this earlier on when he was talking about regulations. He said Enron was a failure of regulations, not of the market. And because of Enron's failure, the SEC got more money. I mean, this is like the incentive structures fail and we'll give you more money. I mean, this is it really talking about it aggravates me. I'm going to get mad. Mike, go ahead. I know you have something to say to the stupidity of this meme. Give us a little logic here.
Well, I guess in retrospect, I've made a career mistake. I've made a career mistake. I failed not infrequently in my life, and I sadly chose a profession where failure is punished fairly heartily. Had I, in fact, gone into politics, perhaps I would have gotten further because of my occasional proclivity for failure. I'm glad that you people sort of set me straight on my career, late in my career.
Yeah, well, I still remain a complete failure, so. I'm trying to get to halfway where Matt Palumbo is right now, and it's really I'm really not doing well. Mike, speak to the meme for a second, and then we'll go to winners and losers.
Well, I did some research on this topic actually, probably about a year ago, maybe even more, and I guess really it depends on how you define subsidy. Because when I think subsidy, I think the government's taking spending like we do for food stamps. The taxpayer pays their taxes to the government, who then transfers that money to an oil company as a subsidy to encourage them to produce oil, or anything else for that matter. I can't find these oil subsidies anywhere. A lot of what people talk about with the tax breaks that they get, which I don't even consider a tax break a subsidy, they're getting the same tax breaks that every single other manufacturing company gets. They're the same ones. So in reality, they're not really even getting a subsidy. They're getting a tax break, but it's not directed at oil. They're just taking advantage of a manufacturing tax break altogether. So it's not even a subsidy directed at oil, so I never really understood the logic behind terming it as a subsidy.
What you're saying is confiscating less stuff from a company isn't the same as a subsidy.
That's exactly what I'm saying, and it's not just
You're crazy.
the oil. It's not just the oil, but it's not just oil industries that get this.
Yeah.
This is all manufacturing companies. If you make cars, if you're GM, you get the same tax break as the oil companies get. So how is this like a direct subsidy for oil? I don't understand that.
Yeah. All right. Let's go to our winners and losers segment. Sorry, Rick, I didn't get to you before the show to get you a winner, but we picked winners and losers of the week. And I'll start with Grant, and if you want to pick some, I'll get to you at the end. It could be anybody, anything, sports teams, politicians, gold versus palladium, whatever you want to do. So let me go to Grant first.
All right, so my first winner is, I don't know if you guys heard, but somebody got caught who works at Taco Bell with a meth lab operating in Taco Bell. And I couldn't help but just think to myself, like, what, that takes a lot, of cojones.
It's your two favorite
that
things,
takes
Frank.
a lot to be like, oh, let me just set up this meth lab in Taco Bell. No one will notice. No one's going to notice. And then just start cooking meth. And I saw the picture of the guy. He looks hilarious. He actually looks a lot like Will. I don't know if that's a coincidence or not.
No, that's definitely total coincidence. It wasn't me making that.
I checked, he was being paid a living wage, so it's okay.
Oh, yeah, he was getting a living wage, all right. I mean, I got $500.
And my loser of the week, I'm currently living in Philadelphia, right outside Philly. I used to live in this section of Philly where this man, Chaka Fatah, he was my representative when I was living in Philly. He just received 20 indictments, and the Department of Justice says that he was running a criminal enterprise, and his indictments include bribery, racketeering, money laundering, bank fraud, mail and wire fraud, and filing false statements.
You know, Grant.
And he's up for re-election.
And he'll win. And he'll win.
He literally was at a campaign like a week ago.
You know,
and,
Grant.
Like a 4-term guy or 10-term guy or whatever.
You know, Grant, as in New Jersey, and that's our weekly news. So.
Mike, go ahead.
Wow, I've been kind of out of the loop this week. I don't know if I have. I know I have a loser this week, and that's Kevin Ryan for not being on the show. But winners, I'm not going to have one this week, man. I haven't been paying attention.
All right, that's fine. Matty Palumbo, go ahead.
My winner is Grant Phillips, our own Grant Phillips. We're getting the Tom Woods show. My loser is Tom Woods because he had to listen to Grant Phillips talk for an entire half an hour.
That was pretty good.
Thank you.
That was very good. All right, I'll do mine, and then we'll go to Rick. My winner of the week, grudgingly, is John Kasich for, I think he's a horrible, 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 horrible governor. A terrible, terrible choice to be the president, but he said enough stuff to get into the debate that's happening tomorrow. He's going to sound like a complete idiot, and I can't wait. He's like literally, there's 2 Lindsey Grahams. One Lindsey Graham, the other John Kasich. Actually, I think Lindsey, no, I don't know. Maybe, I think I might like Lindsey Graham more. No, I can't, I don't. Anyway, my loser is the SEC for imposing, I think it was a 3-2 vote, that CEOs have to tether their pay to the median pay of their employees. So I think that could be the dumbest thing I've ever heard. And it was enacted by, again, a federal politburo that somehow gets the authority, like legislative authority, to make law at the executive branch. And force this on companies I find astonishing, and the founders are rolling over in their graves right now. All right, Rick, go ahead.
My winner would be an unabashed plug for Jayant Bhandari from Capitalism and Morality for putting on an absolutely spectacular conference last Saturday. I understand it'll be at liberty.me as soon as he's, fought through editing all those transcripts. And I guess I'm pretty close to you with the loser. The loser every week would seem to be the American taxpayer or the investors who believe themselves to be protected by people who think that they can manipulate pay in publicly traded corporations. That's just astonishing to me.
It is. I mean, here's a third party that literally has no idea why they're being paid what they're being paid, has no stake at all. You'd think the shareholders would be like, no, we don't like that. The shareholders are ticked off about this. I mean, they're the ones that that have the most they're the most involved. So I don't understand how the SEC can step in and say, oh, we're going to limit the pay when they have no stake in any of these companies. It's odd to me that this happens. That they can allocate resources like that. It's certainly not coming from Congress. So that's a huge problem. It was a really good show. Rick, thanks so much for coming on.
A pleasure.
I hope to have you on again. And I mean, you're close in Carlsbad. Hopefully, we can meet up sometime. We can talk, about all the gold I could buy. I think I could buy about about 0.02% of an ounce.
You can buy his ETFs, Will.
What's that?
You can buy his ETFs. I'll send you a link after the show.
Yeah.
Do they sell it in grams? Do they sell it in grams?
Do they sell it in flakes? Perhaps, because maybe I might be able to buy that and still be able to buy a
Goldschlager.
Yeah, exactly. I was going to say, like, the flakes the size of the ones at the bottom of the Goldschlager bottle that have happened to become my best friends of late. For the Modern Libertarian Grant, please listen to the Tom Woods Show. And I just want to make an announcement while people are still here that next week we have Alan West on to talk about the Iran deal and other things. After that, we have Wayne Allen Root to talk about his new book. And Mike, thanks for coming back finally and drinking your Bud Lights. I told you that's the best American beer in the world. You shouldn't drink any other beer. And Matt Palumbo, thank you for being on the panel and asking some questions today and handling that for me, because I don't know what half of the things you guys said. I wrote some of it down. And again, Rick, thanks so much. We hope to have you back. And watch us next week, same time. Or no, actually the time's different. I think it's 5 p.m. Eastern time. It's 5 p.m. Eastern time, I'm pretty sure. We'll let you all know on our social sites. So thank you, and have a good night.
Thank you.
Go Mets, by the way. They're in first place, so they're the best pitching staff of all time. See you later. All right. All right. Hello, everybody. Welcome to episode I don't know of Unbiased America Live. I think it's 6 or 7, but I can't really keep track since our transition from Beer and Bastards. We have a regular panel, well, our irregular panel. We have Grant Phillips back from the Modern Libertarian, who also was on Tom Woods Live, episode 461, which you could find on Unbiased America. We shared it today, my personal page, Will Ricciardella, and Grant's Modern Libertarian, as well as Being Classically Liberal. We have the purveyor of Being Liberal Logic here and Being Classically Liberal, who's back from a long hiatus of, I don't know, oh, you were moving, and then I forgot what else, because I really don't care that much. You were doing something else that no one cares about. Also, also we have Matt Palumbo, we're going to do, Matt Palumbo's Financial Corner today, since he's a resident financial expert. He's definitely not an expert on haircuts. He is also the author of In Defense of Classical Liberalism and The Conscience of a Young Conservative, which you can buy on Amazon for, like, how much are they, Maddie?
Like 15 apiece. Well,
okay.
like, congratulations on remembering the names. It only took you, what, like 30 episodes to...
Yeah. It took me, that's just as many to remember the name of Grant's page, too.
Okay.
So, also, our guest... Rick Rule, who's the founder of Sprott Global, the director, president, and CEO. We're probably going to open with a talk of some broad-based investing questions, and then we'll get Maddie in there to ask you questions on finances. And in the meanwhile, we'll interject with some questions so the viewers understand what the heck you guys are talking about. So, Rick, the market. I have a couple just broad questions about the market. Obviously, with the government controlling interest rates, they control somewhat of the allocation of resources. A lot of people are putting their money into the market today because it's really the only place you can get a return. I mean, government bonds are... You could actually give me money, and I can give you more back than a government bond can. And, buying real estate has become somewhat difficult, and there's not a great return on it in most places. I mean, in California, again, they're actually starting to prop up a lot of this. They're doing a lot of the same things that they did prior to the Great Recession. But do you see a bubble in the stock market right now?
Well, that's an interesting question. I need to caveat it by saying that I'm a credit analyst first and foremost, and a natural resources expert. When I look at the balance sheets and the income statements of the largest companies in the United States, the S&P 500, I'm struck by how stout the balance sheets are, and I'm impressed with their profit margins. The things that concern me as a non-specialist are the very tepid top-line growth in those companies. I wonder how long they can continue to expand margins when they don't seem to be able to grow their sales. But I'm not one of those who thinks that the U.S. equities market is immediately in line for a dramatic collapse, in some measure because of the phenomenon that you just described. When I was a young man, if you went into a banking institution and opened a depository relationship, they'd give you a gift like a toaster or something.
Yeah.
But my fear if I go in now is that I'd have to give them a toaster to take my money. So the truth is that the yields on the biggest equities in the United States are attractive relative to some of the competition from deposit products. And I agree with your assertion, by the way, that the interest rates are artificially low.
States, or more so from Vancouver?
No, certainly from the U.S. I had a long career working for other people before I began in 1990 working for myself. And really, I didn't set out to become an entrepreneur or anything like that. What I learned is that it isn't all kindness and love in the financial services business. Now, I actually founded my own firm in 1990 to protect my clients from the depredation of other larger firms. It ended up the greed and larceny inherent in the industry was good for both me and my clients, because going out on my own turned out to be a superb move. When in 2010, running my own firm began to consume so much time that I was less able to look after my customers' money, I sold my business to Sprott, but I sold it for stock, not for cash. So I'm now, I think, the 4th largest client and the 2nd largest shareholder of Sprott.
Wow. Okay. Very cool. Now, relating, you obviously you're in Vancouver, you're in Canada, and you're in Carlsbad in the States. What has a more propitious climate for investing, as insofar as it relates to regulations and taxes?
Oh, I think the U.S. is the most competitive society in the world. We win everything, including the race to the bottom.
That goes without question. Oh, okay. I'm sorry. Go ahead.
Well, the most pernicious, the oddest regulations are certainly in the United States. As an example, we have 50 state satrapies to regulate us in the securities business, and then we have the grand champion, the SEC. In addition to that, we're regulated ourselves through FINRA, where a bunch of industry-appointed hacks each try and outdo each other in their slavishness to the stupidity involved in federal regulation. It's truly an odd circumstance. I could make you laugh or cry, I think, for the balance of the program. Certainly make you return to your original program, the Beer and Bastards.
Yeah.
If I entertain you with the SEC. By the way, our mutual friend, Doug Casey, described the SEC as an acronym for the Swindlers Encouragement Committee, and we could talk about the perniciousness of the SEC and the way in which they act exactly contrary to their mandate of consumer protection at some point in time in this interview, if you so wished.
Absolutely. Now, let me ask a direct question about the SEC. And, I mean, you mentioned some of my, you briefly went over some of the questions I have in a second about a lot of these things being superfluous at the state level. Certainly at the federal level. I think under SEC you have PCOB too, which does auditing, which is another, I can't remember their name, obviously PCOB is an acronym. But do you think the SEC really operates like a Politburo? I mean, where are they getting, they're just really coming up with regulations, it seems, at a thin air. And is it to protect some people at the expense of others, like a rent-seeking organization? Basically what a Politburo is.
Well, I would suggest that they're not as efficient as a proper Politburo because they still exist under the guise of a democracy. And I suggest that that there are many competing interests which get served by the SEC. Certainly your direction is accurate, but I think that you would expect more efficiency from them if they were a proper Politburo.
Right now, here.
Low. My suspicion is that if the implicit subsidy came out of the market with low interest rates, two bad things would happen. The cost of capital to the big publicly traded companies that are afforded by very cheap debt would go away, at the same time that the capitalized value of their distributions, i.e. their share price, would decline. Mm-hmm. But one more time, I want to caveat it by way of saying that I specialize in natural resources, and I'm really a credit analyst rather than a broad market seer.
Okay. How did you get into natural resources more specifically? I know Maddie has a lot of questions about that, and so do I, insofar as making money. But how did you get into that initially?
One mistake after another, really. I was interested in resources in my teens, paradoxically because I like to be outdoors. Now I'm characterized as the great despoiler by other people who like to spend time outdoors. I emigrated to Vancouver, Canada in, I believe it was 1970, in response to the fact that it was a very pretty place, but also in response to the fact that a young American in those days was going to have to travel. And I thought about my options: Vancouver, Saigon, Vancouver, Saigon. And Vancouver seemed more appealing to me. And being in Vancouver, of course, this was and is a great center of natural resource activities, the fisheries, the forestry, and of course the epicenter of global exploration. So one thing led to another, really, and I chose to focus, to my very good fortune, ultimately, on natural resources.
Okay, that's interesting. So how did you, just one more question, how did you start Sprott Global and become so successful? I mean, and where did you do that more from the States?